Hi everyone, Happy New Year. Today is 2022, another Friday, January the 7th. And I think a lot of readers is not quite happy, right, for the past few days because after it reopened, after the New Year, then it drops for 3 days already, right? Dow Jones and Nasdaq drops much more than Dow Jones, right? And it's not because of the COVID-19, not exactly as COVID-19. It's because our Fed will increase the interest rate in March. It's quite sure now. I don't know how much, but probably it will be 0.25%. Just I guess. I think it's 0.25%, and it will increase 3 times in this year. So we'll see, right? It will add the shaking to the stock market, but we will still hold our stock because they are good company. And today, I remember I introduced one stock called Paycom before, right? Today we will introduce another stock also for the payroll is ADP. I think a lot of people knows this company because this company is an old company and is very big. Automatic data processing. And it regains its growth after the COVID-19 already. Right? It regains its growth already. So today we will introduce this company. And because of few days the Dow Jones drops and the Nasdaq drops more, so our Falcon portfolio drops to 84%, right? But that's okay. We know that it is a quick rising and a quick dropping, so it's okay for us. So for the readers, if you have any stock you want me to analyze, or you want me to, if I can, right? So leave your message under the YouTube or directly email to me by usstockmarketweekly@gmail.com. And this is our Falcon portfolio, and we still do not have any negative yet, right? Just Facebook now is called Meta, and then becomes zero again. And this year we dropped 4%, right? You can see the return of this portfolio on 2020, 2021, and then it's 2022, right? It doesn't matter. It doesn't matter because United States stocks, US stock market always sharply going up and then sharply going down, but in the long term it's going up, so that's okay to me already, right? So this is ADP company, automatic data processing, and then it already regains its growth after the COVID-19. So today we will have a short brief on that, right? I can't explain it in very detail because this company has a lot of things, and this is a very long history company, right? So we go into that immediately. And Dow Jones yesterday, first day, in drops are 170 points, 0.47% yesterday. Nasdaq, then it drops yesterday. Before I sleep, then it drops more than 100 points, and then it narrows down to 19 yesterday. I hope in the short term, right? In the short term, Nasdaq and Dow Jones hits the bottom already. In the short term, I hope so, right? Because you can see that the Nasdaq been dropped from 16,000 points to 15,000 points, right? It's about 7% already, 6 or 7% already. So I hope it hits its short-term bottom. So I show you the share price history first. Then you can see the ADP's 5 years. For the past 5 years, the return is okay, right? 1.3 times, 1.3 times, and you can see the PE ratio is not high. But this is now become I don't want to use the word old, but it's quite traditional stock, right? Now the PE ratio is just 38, and it has a good dividend, right? 1.7%, 1.7%, right? So we will introduce it immediately. First of all, we have to know that the market is growing or shrinking. So you can see that the U.S. human resources management market is growing. This prediction is from 2017 to 2028. That means for 10 years, right? So you can see for 2017, 18, 19, 20, 21, now is 2022, right? And this market, human resources management market, is growing up quite gradually, right? In a gentle percentage, but it's growing up. So this is all we need to know, because if the market shrinks, then there's no use, right? And ADP company is found in 1949, so it is a very old company. Then in 2020, globally, how many employees it has? 58,000, right? So I know that Hong Kong has a branch, right? And also India also have a branch for ADP. And what does this company did to earn money? This company is for this payroll, help the company to pay for the salary, for monthly salary. I know that one of the big customer is the US government, right? One. And then second is to time and attendance, the record keeping the records. I think now it is in digital, right? Previously, right? Of course many years before, then it's how to do the records by handwriting, and now it's in digital already. And then talent management, then make the appointment for the internal group. Then you have to make the appointment for some big company, right? And then for any employee, then need to take the vacation, then have urgent issues, has to leave the company, something like that, right? And the employees benefits administration, especially for big company, especially for the government, right? For the government, for the big company that has a lot of employees, like Facebook, like Google, they has a lot of employees. So you have to have this kind of company to help you to do the human resources for the payroll, whatever. And then consulting, outsourcing, and technology integration consumes a lot of money. But I think now ADP fixed expenditure, I think it's okay already, because this is a very old company. So you can see how ADP achieved that is by cloud-based human capital management solution. That means then have the server, right? Have the server, and then yes, human resources outsourcing, then help you to manage your human resources. And then yes, international expansion. International expansion means it expand its company to different region in the world. Like Hong Kong has the branch, now India has the branch already, right? In Asia, in Europe, a lot of areas. Another benefits for a lot of investor, they hold this stock, is because its dividend is quite alright. The dividend increased every year. So you can see for 1 year, the dividend of ADP increased at 8.2%, and then 3 year increased at 15.3%, and then gradually increased, right? And if I remember well, then she issued the dividend 3 times per year, every year 3 times. All right. So show some charts, then you can see the revenue of ADP. This is a 7-year revenue one, because it's up to 2021. So you can see the revenue increased quite gradually, because her customer is very stable, right? You can see 2015, and then gradually increase some, and for 2020 to 2021 is a little bit slow. It's still increasing, but a little bit slow, right? Because of the COVID-19. So you can see ADP revenue by business segment, and then the biggest portion must be the employer service, right? Help you to do the payroll, help you to do the talent management, human resources. And then another is the professional, we call it PFO, professional financial organization, something like that. It's help you to directly then issue the payroll to the employees, right? To the customers, employees. So, and then they get the money, monthly or 3 months, I don't know, and then directly issue the money to the customer's employee, and then they get the commission in between. And then this interest on client funds, and that means they have unit trust fund, and then they get some return. So this is all the revenue, all the income structure is like that. Quite clear. I want to introduce to the readers the stock that you can understand how it earn money in few minutes. I don't want to introduce to you and need 1 hour, then you still don't understand. Then it's no use, right? Even now for Facebook or Google, it's quite easy for you to understand how they earn money, right? It's like ADP, you know that, right? I use ADP, and then I just assuming I have 10,000 employees work for my company, and then it is a big headache for you to organize a small team to handle those, because that is not a small number of staff. It's 10,000. Maybe you have to employ more than 50 staff to do that payroll. So why you don't just use ADP to do that for you? So you can have 5 people, and then you can have ADP, and then do the 10,000 staffs, human resources, right? Payroll, and then talent management, inside the company's management, something like that, right? So that is worth. Of course, they get commission in between. And this chart will show you the earnings and dividends. Remember, dividends come from the earnings, right? So you have to add both together. Every year, for the past 7 years, every year, the earnings and dividends are increasing, right? You can see the red colors come from the blue colors because the dividend come from the earning. No earning, no dividend. It's quite stable, right? And this is very remarkable because in this past 3 years, the free cash flow is very good. Not a lot of company has a free cash flow, but ADP has, right? You can see. And of course, in 2020 to 2021, you can see the increments is slowed down a bit because of the COVID-19, right? But now you can see the share price becomes normal already. So you can see it has the free cash flow in the past 3 years, and with the dividend also increased it in that difficult time. So this is a good thing to the investors. And what is the rating for Moody's to give to ADP? Not 3A, right? Don't guess it wrong. Then not AAA. It's an AA minus. It's an AA minus with A, small a, and 3. That means in Moody's rating, it is very low credit risk, right? It's quite okay, but not the highest one. But in second one, very low credit risk. And there are competitors. There are competitors for ADP. And within that group, within that industry, ADP is the first one. ADP is the first. And the second one is Workday. And then is Paycheck. That's also called Check. And then the Sing HR. Sing HR. I will discuss Paycheck in my Hong Kong program. You can see Paycheck's share price performing very good, very stable, and then is always in an upside trend. It drops in the COVID-19, but then it rises up very sharply. Right, you can see that in past how many years? Right, let me check in my cell phone. For past 1 year, the stock price increased at 42%. And for past 5 years, the stock price increased at 1.1 times. So actually, Paycheck is also a very good stock. I will analyze it in my Hong Kong program. And you can see that the PE ratio is very close to ADP. Close to ADP, right? It's 37. And the dividend is 2%. It's 2%. You can see the market cap is small, right? Just 47 billion. and for ADP is 100 billion. So it's half of the market size, but that's okay to us, right? 47 billion is a big company already, right? So we will introduce this company. We will analyze this company in our Hong Kong program, right? Do not compare Paycom with those companies. They are different. Because Paycom is just an app. That means you use an app to manage the payroll, something like that. Or of course, in the idea is quite similar, but different things, right? And you can also see that Paycom's PE ratio is very high. It's 120, and they are ADP and Paycheck is just 37. But you can also see that actually for all time, about 10 years, because Paycom been go public listed about 10 years, right? 8 or 10 years, then it rised 22 times. 22 times. But in the past 1 year, it drops. Why it drops? Because it's too expensive, right? 121. I just read one program from Jim Cramer, right? And then what he said is exactly I want to say. Buy the stock, they earn money. Buy the stock, they earn money, right? In the past 1.5 years during the COVID-19, a lot of stock that does not have earnings, they rose up mysteriously, right? Mysteriously, I don't know why they rise up. Like the Peloton, a lot of stock they just rise up for no reason because the people had to stay at home. But now America gradually reopen. I don't think it will lock down again, right? Because now the Omicron seems the injuries and a lot of people get infected, but that is not a serious injury as the Delta or the first one. So I don't think that if just because of Omicron, I don't think America will lock down again. So actually, go back to the stock that has the earnings. Earn money. It's not just an idea. That is passed away already, right? Then you should dump that stock away and then get your profit. Like the Zoom, like a lot of stock Pelotons, where they don't have the earnings, or the earning is very little, but they have to support a very high PE. So you can't do it, right? You cannot do it. So the market price, the share price reflect what it is, and then it tumbles down, right? And then go back to the stock that really have a good earning. Actually, for ADP and for Paycheck, they are not fintech company. They will not have they cannot stand for a PE like 100 or 80. So they can only stand for a PE 30 something, right? They even cannot stand for a PE like 60. But that's okay for us because it is for long term, right? So actually, I hope this is helpful to you, and then I will analyze Paycheck in my Hong Kong program. So this is just for your reference because this financial result of ADP is from July to end of September. So the new one, the new quarter report will issue. I hope it will be in this January. And just for your reference, for the past 1 quarter for YOY, that means year to year, right? Year over year, the revenue increased at 10%, right? And then the net income increased at 16.27%, right? And then the net income rate is 18%. That is okay to me. For this kind of old company, for this kind of traditional company, this is okay for me already. I don't hope the share price to shoot very high, because if it shoot very high, it will drop if the net profit cannot catch up. So this is fine to me, right? So whenever there is the new quarter result, then we will make the program as well, right? Okay, then we share up to here, and then please give us a like if you like this video, and then please share to your friends if you think they will like it, and then please help to press the subscribe button and then press the bell icon, so whenever there is a new video uploaded, you will be notified by YouTube immediately. Okay, thanks for watching, and then I hope everyone have a very peaceful weekend. Let us see next week, next Friday. Bye bye.